afternoon, everybody. We are now up to, I hope everybody can hear me. Can everybody hear me? I hope so. If you can just give me a thumbs up, that would be great. But welcome, everybody. See, we are a minute in. So I'm just going to give everybody a kind of a minute or so to just join. I see a few more people, attendees are joining, and then we can kick off with the presentation. But welcome. Welcome to our first webinars, 8th Season Capital and Future Build Ventures, and hope you'll get to enjoy what we have to share. Okay, hopefully you can also see my slide deck. Perfect. I think we've got enough attendees to kick off. I don't want to waste everyone's time on the hour. Everyone, welcome to our webinar. I hope you get to enjoy it. I just want to see whether we are recording. We're supposed to be recording this. Yes, we are recording. If you have a question, maybe just to kick off with regards to the what do they call it, the housekeeping. You know, if you have a question or any comments, please just pop it into the Q&A or the chat. So if you have a question, you can pop it into the Q&A. Hopefully you'll have access to that. And in the chat, if you have any other points to raise, you can just pop it into that if you have the access to that. So happy, we'll kick off, and I'll introduce myself and my colleagues. You probably don't see them as yet, but my name is Thabo Ngalo. I am a founding partner at 8th Season Capital, and I'll tell you a little bit about what we do. And I'm also co-founding partner and general partner at Future Build Ventures, which is a fund we'll chat about. And I'll give you a bit of an introduction as well to what we do as a collective in terms of what we're trying to do in directing more money into venture capital, and particularly into Black-founded startups in South Africa. So Teresa, I don't know if you've got a sec. You want to just introduce yourself quickly, and then we can jump into the chat.
All right, thanks, Thabo. Yeah, and good afternoon to everyone. Yeah, my name is Teresa Rangata. Also co-founder of Future Build Ventures, which is a fund that will introduce to you guys in this presentation. Looking forward to it, and thanks everyone for joining.
Perfect. Our other colleague is Chichi Shu. She'll join us a bit later on, but the three of us are partners on the fund. All right, I think let me not waste too much time and just jump into it. There's a lot to cover in terms of what we want to cover. Can everybody see my slides okay? I hope so. Perfect. I'm taking that as a yes, yeah. So right, I'm gonna maybe just kick off with the obvious disclaimers that I think what we're trying to do today is not give advice naturally. That this obviously webinar is presented for public purposes. This is not a solicitation. I see on the group there are a bunch of folks who are joining from different jurisdictions. It's not a requirement in South Africa, but in other parts, like in the US, we absolutely have to say that we're not soliciting for investment, and we actually just doing this for educational purposes for our investors, for our clientele, and our stakeholders. Of course, this is not financial advice, as I said. Even in South Africa, from an FSP perspective, we are an authorized financial services provider with the FSCA, but on this particular call, we are not giving advice. So I think it's important to just put these disclaimers out there, and I've tried to make them big enough so they're not the kind of small font that we usually see everywhere else. So I'm gonna share a little bit about the, in terms of who we are, a little bit briefly in literally like a minute, and then I'll just jump into the kind of the meat of what we want to cover today, which is the venture capital landscape in South Africa, and I think broadly on the African continent as well. So of course, as you know, the VC, or as you might know, the VC industry is very tiny, and I think we do have to look at it from a Pan-African perspective as well. And I'll jump a little bit into who's investing. So to an extent that people want to know, how do you then access this venture capital that we all keep talking about? So who's investing, who's actually raised money to invest, and then we'll chat a little bit about that. And then I'll end off a little bit with some success stories we've seen in the startup ecosystem in South Africa. Perfect. So I'm gonna just jump right into it. I had a poll that I wanted to just start. So I don't know if you guys can see the poll, but if you could just, if you don't mind, just sort of just voting on it to kind of let us know how familiar you are with VC, just so I don't waste too much time, talking about the basics when the bulk of people on the call actually understand it. So I'll give it a couple of seconds, and then we can just jump into the chat. Perfect. We are at, call it 70%, 60% of the votes. Thanks. Majority of people understand VC quite well, so that's great. Very useful. Thank you. Perfect. We're about 63%. I'm going to publish it anyway in the interest of time. And then you can kind of see. So I think the bulk of people on the call are quite comfortable with VC. So I'll just jump into the discussions and not waste too much time on a few issues. All right, so thanks for that, and thanks for the vote. Now I know how to position it. So I'll tell you a little bit about who we are as 8 Season Capital. So what we're trying to build, and I think a lot of people take VC as this glory industry, and I think raising a VC fund, as I think you'll kind of see in the series of webinars we're trying to do, is to try to actually show that it's as much work and as much pain as raising funding for a startup. And a lot of VC managers in South Africa, have to grind from the bottom, ask for money, just like every startup has to do. So I think it's important to position us as 8 Season that what I'm trying to build is a platform, for instance, that allows investors to connect quite quickly and quite well with VC funds. It's a massive industry, lots of small funds, lots of large funds, and an industry that's perhaps not widely understood from how to actually allocate into it. So as 8 Season, we're an advisory business, and our aim is to try to kind of demystify, and I don't want to use the word democratize, but that's kind of what we're trying to do with the venture capital asset class, particularly starting in South Africa. And our partners, the Future Build Venture Fund, as we've launched a very micro fund, a tiny fund, as it were, to back black startups in the tech space in South Africa. So that's kind of where we are. So I'm going to stop there. I don't want to waste too much time. Let me just jump into the meat of the slides, and then we can chat a little bit more, just to give time for questions. So as I said, if you have any questions, please just pop them in the chat or in the Q&A, and then we can kind of take it from there. Great. So I'm going to chat about VC as an asset class in terms of what actually we're positioning. I know a lot of people on this call actually understand VC quite well, so I'm not going to spend too much time on this. But suffice it to say that we are looking at funding that's obviously at the very early stages of a business development. And of course, it's really spread out from really what they call pre-seed or very early stages up until to the later stage growth cycles that kind of intersect with what they call the private equity market or other sorts of funding like mezzanine, etc. So that's where the kind of discussion is at. I'm not going to spend too much time on this. I was attending an investment forum this morning, interestingly, and it was fascinating with the VC room that a lot of discussions from startups were just to understand what an SME is and what a startup is. And I think it's pretty important to point out that venture capital focuses on startups, and these are not your traditional SMEs. So it's important to put out just from upfront that what we're talking about here are largely technology-based businesses or businesses with a tech backbone, highly scalable, high growth. I'm talking 40, 50% year-on-year plus kind of growth. Very, as I said, highly scalable, and of course with an opportunity to get really good exits out of. Important to also mention that what I'm talking about here is VC, which is professional investors who invest in startups, not just your angels and not your kind of other funding channels. So as you know, everybody knows there are various channels where startups can raise funds. And these are some of the things. So I'm really focusing on the venture capital space and not so much on all the other call it funding channels. Lots of stuff happening. And interestingly, in the South African environment, what you'll find as well is that a lot of funding into startups comes from investment holding companies. So you might find a lot of funding going to startups, but it doesn't always come from.
Slides are not moving on our side. It's still
Okay.
on the first page.
Are you see me now? I'm on the dive. You guys through the asset classes in terms of the business growth phases. I took you guys through the, sort of what is the venture capital landscape. I took you guys through who the investors are, the different asset classes that are out there in terms of alternative assets, the assets that are out there from real estate to commodities, art, collectibles, and so forth, and how venture capital sits in that bucket of funds, and how it actually fits into the broader portfolio. We spoke a little bit here about the growth in VC globally that we've seen over the last 2 decades, and some strong numbers. We're in a bit of what they call a VC winter now, but the numbers are still much larger than they were a decade or 2 decades ago, particularly in a market like South Africa, which I'll show. We spoke about diversification a bit in terms of the, how venture capital is not correlated, with other asset classes. That investing in capital, in venture capital, actually gives you diversification benefits. And of course, importantly, the power law in VC, that if you're an investor in a VC fund or in startups, it's important that you try to spread your investments. So, if you have let's call it 100,000, 500,000 Rand, you can buy into 2 or 3 startups, but the chances of them going belly up, as it were, are quite high. So it does make sense to look to invest in a venture capital fund that has a much larger exposure to a range of startups, because ultimately, as this power law ultimately shows us, that the bulk of your returns will come from a very small part of your portfolio. So I think this is what this slide is trying to demonstrate, versus what you're finding in traditional markets, where the bulk of your returns are, I don't want to use too much jargon, but they're in a normal distribution statistically, that they're going to be centered. Almost everyone is going to earn very similar kind of returns, and there'll be 1 or 2 outliers. But in venture capital, is the big ones that actually return the bulk of your returns. Let me maybe pause here a little bit. I don't know if there are any questions from anyone that we can take in the meantime. So yes, there's slides. We're more than happy to share. I think this webinar is also recorded, so we'll certainly jump into. We'll share the recording as well. And if you'd like to share the slides or get a slide, just reach out, and then we'll definitely get to you on that. Perfect. So let me go on quickly. Hopefully you guys can still see my slides moving. I'm on a slide saying the African and South African landscape now. I think this is the kind of meat of where we wanted to get into. So hopefully everybody can see that. I'm hoping a thumbs up, somebody. Great, I hope so. Terry, so I think you guys, Chichi, you guys can see the slides, right? Perfect, excellent. So just to talk a little bit about the funding landscape, and I want to spend a little bit of time on this, just so we kind of position where we are as a continent, and obviously as a part of the continent is South Africa. So this is the kind of startup funding. This is data that Africa Big Deal, Max Maxime and the team produce. You can kind of see where we are as a continent. And I'm talking about here, I was doing a presentation recently, and somebody joked and said, yeah, this is Africa the country, right? So think about Africa the country, when foreigners talk about coming to Africa, so think about it from that perspective. And what you kind of see, that our startup funding ecosystem as a whole is really tiny compared to the rest of the world. So in comparison, for instance, if you look at, when I just use the peak numbers, call it in 2022, when we were peaking at about just under $5 billion in funding as a continent, the US, for instance, was raising $240 billion. Europe, which is the EU, was raising 90 billion. 90. And I'm just using Canada as an example. Canada, which is adjacent to America alone, was raising 10.5 billion. So you can kind of see where we are positioned as a continent, that our funding ecosystem is still relatively small, and obviously still nascent in its development. Importantly, I think is to mention, when you kind of try to kill that concept of Africa as a country and look at the real picture, which is the continent, is that startup funding obviously comes from, as you might expect, from the big four geographies. Egypt, which is the big economy in North Africa, South Africa in the south, Nigeria in the west, and Kenya in East Africa. You do have a lot of funding coming from Ghana, as an example, from Senegal, but those are dwarfed really by the big four, as it were. South Africa, as you can imagine, almost all funding coming from Southern Africa, comes from South Africa. Very little goes into some of the markets in our neighboring countries. So I think it's important to paint that picture before we kind of look back. And this is important for me to point out as well, that in Africa, you still have a very large shortage of capital going into female-founded ventures. So female-backed businesses are the yellow part that you'll see here at the top. So the very top part of the yellow shows you startups, tech startups that are founded solely or managed by a female entrepreneur. And then the second block, where it's the gray part here, shows you the mix, where the team might have a diverse team of males and females. So I think to drive the point here is that, we need to do something about this. In terms of just the amount of funding that's going to female entrepreneurs, female tech founders. 1 or 2 or 3% is just ridiculous from what we've been seeing. And these numbers are also reflected across what you also see across the rest of the world. So it's not just an Africa problem, it's a global problem. And hence you'll see when the guys speak about the Future Build Fund that, they want to get this to kind of a 25% actual funding level to female businesses. So where are we in the SAE ecosystem? The SAE ecosystem is very interesting in that you've got very robust venture capital funding. You've got really robust firms that operate in South Africa. I mean, I'll show you a slide where I've got a bunch of the VC firms that operate in the space. But what you're also finding in SA, I think as everybody would expect this if you are dialing in from South Africa, is South Africa is very corporate driven. So when you look at the funding ecosystem and the kind of backbone of the ecosystem, the corporate sector still plays a very important role. And what you've also seen of late is a very strong corporate sector that's also participating in venture capital. So kind of what they call CVC, or corporate venture capital, in South Africa has been a feature. I won't speak about Naspers Foundry. Obviously, they left South Africa, but there is a legacy and a story to be told around what that kind of environment created. The likes of MTN, Standard Bank, ShopRite, we've seen recently doing a deal with kind of other foreign retailers as well on the corporate venture capital side. So you are finding that the corporate sector in South Africa is really strong from a perspective of being able to back the ecosystem. But there are strong challenges as well, access to corporates, the kind of time it takes to close deals with them, the ESG issues. There are a lot of other challenges that also hamper the system. You have government, which is obviously very powerful in South Africa, and a lot of people will tell you there are lots of great initiatives. However, you don't have always, kind of the right level of delivery. So bureaucracy is a big issue. Time it takes to respond, and I'm talking all the way from NEF to GP to whoever, IDC, all of them. I think it's always a challenge for entrepreneurs, but the systems are there, luckily, in the South African funding ecosystem. So we have a system that the instruments are there, but perhaps on the government side, they haven't really scored that well. You have a very strong ecosystem as well in South Africa, driven by universities. I don't need to speak too much around people around the call on what Stellenbosch, Stellis is doing, UCT, The Gauteng universities are trying, they're lagging behind, but the likes of VETS, my colleagues at Tax Innovation are doing a lot through University of Pretoria. So there is a growing ecosystem from universities that support research and support innovation and support the funding ecosystem. So that's quite important to highlight as well. I'll speak about capital, the risk in terms of the, VCs themselves. And then, of course, entrepreneurs. One of the big things I think we kind of also starting to see is founders who are exiting their businesses, who are then also deploying capital into ventures or into other startups that they're exiting for. I know, a VC fund Endeavor, South Africa does that quite well. You've seen the likes of Sweep South. I think Naledi Pandor exiting. Sorry, not Naledi. Apologies. Dr. Pandor, the younger madam, exiting Sweep South and investing in a venture fund, E4E Africa, for instance. So I think you're kind of seeing as well an ecosystem that's developing where you want to have entrepreneurs who are exiting, also starting venture funds themselves and also investing in the ecosystem. So that's starting to happen, and I'm sure you all know that's something that's been the backbone of the VC industry in a market like the US. I don't need to speak to you guys about Andres and all the other guys who have founders who've backed VC funds. So the ecosystem in South Africa, I think these are numbers from SAFCA. And I think, look, I mean, the graph is very noisy, so don't worry too much about the colors. Suffice it to say, if you focus on the right-hand side, is that the ecosystem in South Africa is dominated by technology. Fintech is the number one, so that's the green bar at the top. So the amount of funding that's going into startups has really been going into fintech. Software, kind of B2C businesses on the SaaS side, have also been really big beneficiaries. Things like health tech, food, ed tech, clean tech at the moment are starting to attract quite a lot of numbers. And these are numbers reflected in the SAFCA survey, which you can all download on the SAFCA website. So I think it's important as as people who either invest in VC or want to access capital from VC, that they understand that there is a sector focus and a strong sector bias. And it's important that everybody kind of match their mandate with the VC fund that they kind of need to approach. We get a lot of people, kind of calling up and saying, you know what, I want to apply for VC funding, but you just want to spray and pray, and that's not the way to go, kind of thing. You want to identify the sectors that different VCs play in, just so you also know, how to approach them or who to approach. Important here to just talk about the funding cycles, because I think as people who are either looking for capital or deploying capital, to kind of understand where we are. And I always, everyone I speak to now, I'm like, this is the best time to actually be deploying capital in venture capital or into startups, because as you can kind of see, there's been a massive drop from the 2002, 2022, 2021 kind of boom. Quarter by quarter, the numbers have been coming much lower. Even the kind of first quarter funding numbers for South Africa, quarter and quarter, based on this quarter of 2024 versus 2023, have been much softer. So you are finding that there is a crunch. If you're a startup raising funding at the moment, there is a crunch in South Africa. And I'll tell you a little bit about some dry powder as well, which is a positive. But there has been a crunch, because I think what you're also finding in SA is that it's not just South African investors who are investing in SA. So the global crunch, North America, when it pulls back, it kind of pulls back for us as well. And I'll show you in one or two sort of slides. So these are just numbers of number of sort of startups that have been funded in South Africa, just to give you some numbers, just so you understand. I think these are startups that are above $100,000 in funding, and of course that have been disclosed, etc. We understand, of course, that it's a private market. It's not like the listed market where information is publicly available. Here, not all the numbers reflect activity, but to give a bit of an idea, you can kind of see how many kind of startups get funded in South Africa on a yearly basis. But call it 60, 2023. That are kind of sizable transactions. So I think when you try to understand the funding landscape in South Africa, we're not China. We're not funding 1,000 startups or 100,000 startups. It's a very small ecosystem, a very close, I'm gonna call it intimate ecosystem. And it's pretty important, I think, whenever we speak to funders, or sorry, to founders, is, start building relationships with VCs way before you need the money. Because as you can see, the kind of deployment is not massive compared to the rest of the world. So if you look at then, the biggest issue I think we are struggling with still in the ecosystem and then across Africa is the exits, and everybody keeps on pointing this. I think if I know we have a few VCs on the call, but the guys can attest to this, that, it's a question you get if you start speaking to international investors around, where are my exits and how am I going to get my money back? So what you're finding though in the ecosystem is that South Africa fares a lot better than the other big four. So I'm going to kind of ignore, not for disrespect, but kind of ignore the other African countries and focus on the big four. So if you look at our ratio of the number of deals to the number of exits, South Africa fares a lot better from a ratio perspective in terms of the kind of exits we've seen. What you're finding, for instance, in a market like Nigeria, is you have a lot of deals, but not as many exits. And when I say deals, I mean money that's going into funding startups. And that's quite important, because if you look at a market like Nigeria, which is almost at a 30% or 30 ratio, which is to say that for every 30 startups that are funded, only one actually gets a successful exit. In South Africa, that ratio is much lower, as you can see in the chart. So I think it's important to talk about these things, because this is what drives the VC market, exits. People can give you money to invest in these startups, but how are we going to get our money back? And I think this is a great picture to put from an SA perspective, that in the South African environment, you have a system that doesn't do as many deals, but there have been a lot more orchestrated exits, as you'll see. So if you look at, for instance, acquisitions, sorry, and I know you probably can zoom in, but if you look at acquisitions in terms of exits from startups in Africa, you'll see South Africa keeps on ranking quite highly in terms of the percentage of exits. And this is important to mention, because we have a very strong corporate culture in South Africa. And the corporates, as I think I pointed out in the previous slides, really drive the economy in South Africa. So you're absolutely not going to get startups, by and large, exiting into IPOs, into listing. With South Africa, we've been struggling with the Johannesburg Stock Exchange, the JSE, that's been actually shrinking. So you actually can't expect, or shouldn't expect, as an investor or any player in VC, to think you're going to get VC. I mean, I spent a decade looking at Pan-African equity markets, and it's even worse when you go north of the Limpopo, as the saying goes, in terms of liquidity. So you definitely don't want to expect IPOs coming from Africa. So what you actually need are acquisitions, or some sort of trade sales, or either buyouts, or secondaries, or either buyouts by private equity or by kind of later stage funds as well. So this is quite important to mention, that we've been kind of on this race, but all the acquisitions that you kind of see largely in the continent are coming from markets that have a really strong corporate culture, such as Egypt as well. Egypt has a very strong and a very big corporate and banking system. Kenya, Nigeria, you would expect the same as well. So from just to wrap up on the exits, the bulk of the exits we've kind of seen, or the bulk of deals, as I think I mentioned, they've come from fintech, which is the big bar that's sticking out in this chart. But you've kind of not seen as many exits. So you kind of have a good ratio with fintechs, and I think people have a better chance of exiting out of the fintech space than probably others from what we've seen. But this is kind of data from Brighter Bridges that kind of shows where the exits have been coming from between kind of 2019 or probably over a decade, going back a decade or so, a little bit longer than 2019. So the South African ecosystem, if I can maybe pause here and chat about what's really, I guess what we are seeing happening is that you've got a system that has really strong forces pushing it forward, but you've got obviously very restraining forces as well. So you've got a very, sort of strong developing ecosystem in South Africa, lots of opportunities that sit in our economy from solving challenges, as we all know, across Africa. There are a lot more challenges than we have solutions for. And of course, you've got strong government support from South Africa. However, you've got a very fragmented ecosystem. You've got a Cape Town versus a Joburg kind of ecosystem. You've got a racially almost, not as balanced as it should be. You've got a system that's fragmented from funding from a gender perspective as well. So those are the kind of things that need to be fixed, because you can have the system growing in South Africa. However, you're going to keep on growing the gap between, particularly Black founders and white capital. So we need to see more Black VCs. And that's the reason I think 8 Season exists as well, to try to back more Black VCs and kind of see how we develop the ecosystem. Culture of entrepreneurship is there in South Africa, but not as much, perhaps. We give up a little bit quicker. Failures are frowned upon a lot more than in other systems. Lots of red tape with compliance. Anybody who's in South Africa has a P2R Limited would have gotten some sort of SMS a couple of months ago from SARS saying, we want to sue you if you have a dormant, not sue you, but penalties. So yeah, I think compliance is a big issue. Lots of ESD, corporate venturing, but I think support and the network, it doesn't really talk to each other. Lots of diaspora kind of connections. So we've got a lot of South Africans who live in the UK, across Europe, in Australia, but perhaps that foreign capital is not really finding its way into South Africa. When you look at a market like Nigeria or Kenya, there's a lot of diaspora capital that flows into those markets from folks who are Kenyan or Nigerian, but live in the US or live in the UK, who have largely been large investors in venture capital or in startups back in their home countries. And that's something I think in South Africa, we're not seeing as much from tapping into our own diaspora. We need to talk about more success stories, and I'll chat a little bit about that. Yeah. So I'll wrap up a little bit and chat a little bit about who's investing in the startup ecosystem in South Africa and who the VCs are. And maybe to just wrap up a little bit about how you guys can access the VC ecosystem. We stand available to kind of help anyone who wants to know how to look at venture capital or how to access them, and that's what we do. So more than happy to give further direction on this. But if you look at the biggest investor in South Africa, which is the pension fund industry, primarily driven by the PIC, which is the Public Investment Corporation. So obviously manages GEP funds, GEPF funds, government funds, employee funds. What you're finding is, and these are numbers from Riskura, that kind of give you an asset allocation breakdown as to where a lot of the pension funds are invested. And I like to talk about this slide because for a lot of us on the call, one of our biggest assets in our personal balance sheet is your retirement fund. And so it's very important to sort of understand where that retirement fund comes from. And of course, for the other big asset is obviously your house or your real estate. So these two assets make a lot of, the bulk of your assets. And it's important to kind of see how where your pension assets are actually invested from a return and what you think you're going to get out there, and obviously from an exposure perspective. As you'll see, the very last chart here, so if the writing is a bit small, but you'll kind of see here, South Africa is very largely, much like our neighboring countries, who obviously really have a monetary policy much like ourselves, is we are very big on listed equity, fixed income, and a very tiny amount invested into private assets or alternative assets. So investments into private equity, into venture, all sorts of other alternatives are almost a tiny percentage of allocation in South Africa. I don't want to get too technical, but Regulation 28, which is legislation in South Africa, allows pension funds to go a lot higher. But what we're actually seeing is that there's a lot of risk. I guess a lot of people perceived risk that a lot of pension funds kind of see. So you have an ecosystem in South Africa where a lot of investors, and this is a good push, because over time, what you'll probably see is that the alternative or private market side is going to grow quite quickly, which means there'll be a lot more money flowing to things like private equity and, of course, venture capital. if you look across the continent, and you'll kind of see this a lot, in markets like Nigeria, Kenya, lots of allocation into actual cash or fixed income. And a lot of people are averse to investing into private equity or venture capital. So this is important because I think it speaks to the next chart, which kind of shows you where the money for private equity, for venture capital has been coming from over the years, and our friends at Africa the Big Deal put up, pretty good numbers. And as you'll see, a lot of startups in South Africa and across Africa have been funded by money coming from North America. So you got to pay careful attention to that, because if you're a startup raising money, you got to consider the US. If you are a VC raising money, you got to consider the US. So that's quite important to point out. And of course, Europe is our very close cousin culturally, particularly the UK. But lots of other funds across the EU have been coming into Africa as well. So here we're talking about funds that are domiciled or based in these jurisdictions. Less so from the Middle East for now, less so from Asia, but certainly a very good base as well from Africa as well in terms of our own venture capital funds. So this is quite important, I think, to just look at, because as I said in the previous slide, local pension funds aren't really allocating into venture for now. And I'm going to say for now, because at some point, the asset consultants are going to kind of start seeing the creep that coming from not investing in a high yielding asset class like venture capital. Importantly here is that if you look at SAVCA numbers over the last couple of years, you've seen a lot more investment coming from independent managers. Which is to say here, I won't bore you with this too much, but which is to say that there's been an increasing number of venture capital funds being launched in South Africa, and it's been a massive increase. I think the 2023 figures, if I saw, were about 62% of funds deployed were deployed by independent venture capital funds. I'm talking about funds versus angel investors versus government, or versus what they call captive corporates, which I call it the, venture funds that belong to, a Naspers or a Pick and Pay or ShopRite or Standard Bank or whoever else, or a NetBank. So independent funds have been growing quite a lot, which is quite encouraging to sort of see that there is a lot of room for growth in managers. I couldn't fit enough logos here, but there are a lot more managers. I mean, we track managers across South Africa. We track managers across Africa as a fund, as a firm, and lots and lots of active managers. I know some of my colleagues from Savant. I think one or two other managers are on the call, but lots of managers in South Africa that a lot of people as yet don't know exist, or actually don't even know how to access them. So it's a very rich ecosystem. Lots of small funds. There are lots of other emerging funds that I haven't put here, but that kind of exists out there in the system. Very quickly, just to talk about dry powder, and I like, this is a very common term used in venture capital, and it's all about how many funds are out there that have just raised money that are ready to deploy capital in the SA ecosystem. So there's about 3 billion rand, essentially, that's just been announced, and we tracked this probably over the last 12 months from funds that have raised money that are based in South Africa and are ready to deploy. So for instance, I won't jump into all of them, but the likes of Knife Capital closed just last year. When I say closed, I mean they're ready to give you money if you are a startup meeting their mandate. And that mandate is a Series B fund, which is a much later stage growth fund. You have, for instance, Havaik, that's also raising a fund. Lots of other announcements that have been made from guys like Clive Badco and Conducive. So there's a lot of money in the ecosystem that's yet to be deployed, and that will still be available for startups. So chat to us if you want to sort of get a flavor as to which VC to raise money from, because in the VC world, I think it's important to understand when you want to approach managers. It doesn't help approaching a manager who's fully deployed and maybe they haven't as yet started raising a subsequent fund. So it's important that you also understand when to speak to managers. And I see this a lot as a frustration from founders saying, I have a list of 100 VCs, but I email them, they tell me no. They don't tell you no because they don't like you, but perhaps it's because you're not out of mandate, or perhaps they're not deploying capital. So it's important to track these numbers to know who's just raised, and they have call it a 2-3 year window to deploy this capital and know who to target. So almost all of these guys are either Joburg or Cape Town based. And I understand, I don't want to, I know a lot of other funds are going to raise. I would imagine the likes of Savant, the likes of DAV, Digital Africa Ventures are also looking to raise their subsequent funds. So lots on the go, as you kind of see. So I want to wrap up here. I know my colleagues are going to kill me for not giving them enough space, but I want to just wrap up here and close and talk about some success stories, because I think we don't tell these stories a lot around what's happened. So Yoko, I want to chat about Yoko. So I want to chat a little bit out here. I mean, we spend a little bit of time with this when we particularly speak to investors who are not necessarily in SA, to just show them what's been happening. Yoko has been, a successful fintech. I won't spend too much time on it, but just suffice it to say that the venture model or venture-backed kind of startups in South Africa do exist, and this is another example of a successful one. Pineapple, you've seen some pretty interesting fundraisings that have come out of it recently. I know Old Mutual, for instance, is backed them as well on some of their funding. They recently closed, I think, a $21 million kind of funding round. So, really good startups by 4 chaps who grew up next to all of us and probably went to school and varsity with all of us, actually doing it. Ozo, I won't speak too much about Ozo. You guys might know Ozo is the payment sort of gateway system. Does EFTs, backed by Kalon Ventures. They, I think, Kalon put in 10 million rand to start off with, and then they got to their Series B, having raised $48 million, about R1 billion. So these things are possible. Sweep South, we all know. I know they're obviously going through their own challenges, but backed by Naspers Foundry, backed by Endeavor as a VC, etc., by Future Growth, which is part of Old Mutual as well. Raised big numbers. Zuzi, another successful startup, now backing obviously ShopRite on their delivery stuff, and Rentosa, backed by MIC, our friends at Kulisani Ventures. So I think this, maybe just to close off on this, to say that it's a very exciting ecosystem, and I can go on and talk about it for hours and hours, but it's an exciting ecosystem that I think is attracting a lot of money, and is going to continue to grow from the number of startups that are coming out there. Lots of money, as I said, about 3 billion rand, apologies, that's just been sitting in funds, dry powder, if you are ready to engage, but a lot of opportunities that are coming out there. So let me stop here. Chichi, Teriso, yeah, I don't know if I'll have a look at the Q&A, but let me stop here and then hand over to my colleagues as well. Teriso, Chichi.
Thanks, Tabo. I think you can maybe address some of the. I think we have 2 questions in the Q&A. Some interesting questions there that you can address before we jump into the fund introduction.
Okay, perfect. Chichi, have you? I don't know where I'm trying to figure out where the questions start. I haven't. So we'll share the slides. Yes.
The last 2.
Okay, Department of Science and Innovation as a date committed. Look, yeah, we've been engaging with DSI and with TIA on the fund. So they've got a couple of initiatives. I know they've just backed a fund with the UN, I think, Development Agency, on a fund that's back to back kind of academic innovation. So there are a lot of initiatives, suffice it to say, that come from DSI. I know a lot of funds on the VC side as well have received backing from Science and Technology and TIA. So yeah, the initiatives are there. I think it's all about how we work together as an ecosystem between funding government, because what you're also finding is that TIA, for instance, gives grants or non-dilutive capital, which helps de-risk seed stage investments for venture capital funds. So very useful. Maybe let me end it here. We can chat offline if anybody needs to. Yes, JSE have access. So JSE has a platform now called the JSE Private Placements, if you guys want to Google it. And what they do with that is they're trying to list private businesses that are not, big enough, I guess, to be listed on either the Altex or the main board. But you can kind of start on the private placements, kind of suss out, and they kind of connect funders with people looking for capital. So yes, I think they do, but to be honest with you, listed markets have been struggling, especially in South Africa. I think the one thing we celebrated this week or last week was We Buy Cars as a listing, and we haven't seen any listing coming on the JSE for quite a long time. So they have plans, but it's still tough. Private markets continue to grow for various reasons. Yeah. So low numbers of. You know what? I think there are lots and lots of female founders, and maybe my colleague Chichi, you can take this because you've been on this journey for a long time around female founders. Yeah, there are a lot of fascinating, fantastic female founders. I mean, one of the businesses we're looking at now, and I'll say this openly, is we might not get a slice of the check, but or of the cap table, is a business called Wello, funded by a lady, Zanele, who does sort of healthcare, and fascinating businesses that are out there started by female founders, particularly Black female founders in South Africa. So there are lots. I think it's just a question of mismatch between connecting, and I think connecting founders and funders. And I think one of the biggest things we've seen happen, and I believe in, is that you got to force funds to do it. So it's got to be in the mandate that what you deploy, just like in the Future Build Fund, 25% of the fund is solely dedicated per mandate to be deployed into female-backed funders. So it's got to be deliberate, we can't play lip service and say, I'm going to fund Black females and then never do it. It has to be a mandate. It has to be in the scorecard for the funds to say that we're going to hold you to account and show us every year how many you funded and how many you haven't and what the issues are. So it's got to be deliberate. Great. Oh, there's more. Sorry, I'm not scrolling down enough. So, okay. Flow funds. Yeah, look, I mean, I think in terms of VCs, and I think some of the VCs on the call can obviously speak to this as well. But the VCs would probably try to act much quicker than, I guess, government red tape, if you want to call it that, because there's a commercial interest and aspect to the venture capital kind of space. But of course, you've got to be ready. You've got to be ready with your data room, which is your folders, your documents, etc. What takes long typically is try to fund a startup that doesn't have their stuff together. Maybe their financial model is all over. There's a lot more work to be done. So I think the more ready you are, the faster it possibly goes. On the VC side, government, I think obviously they have some issues or might have some issues. Not every part of government, let me be very clear, that there are very good government entities, etc., that operate fast. SARS is one. So don't owe SARS money. You'll see how quick they go. So yeah. So I think it's very broad, but I think VCs would typically act quicker, particularly because there's a motivation for them to close funds and to deploy capital than other funders. Great. Oh my gosh, there's a lot more questions. I don't know if we're gonna have time to even chat about the. Do you guys want to maybe chat and then we can go into the Q&A, or do you want me to just continue the Q&A? I think
maybe let's do this last question, Tabo, and then we can jump into it.
All right, perfect.
The last two questions, yeah.
Okay, I'll be very quick on them. So separating VC funds and fund of funds capital. So yeah, so I mean, look, I think the fund of funds model is not something that's big and common. I think if you look on the alternative space, it's only the likes of kind of my former employer, Old Mutual. On the Old Mutual side, they do fund of fund investing on the private side quite a bit. It's very common on the listed space. So multi-managers, you can invest quite widely. So yeah, look, it's a growing space in South Africa. Only the SME fund and perhaps maybe Fireball, etc., would be fund of funds, but it's still a growing industry and it's still a nascent space if you think VC is nascent, fund of funds is even more nascent. But I think what fund of funds obviously give you is a protection and a layer of, having diversification into different managers. And then interest from climate tech, without a doubt. There's a lot more agri-tech climate fund. I think there's the slide I showed, which just showed as well, the clean tech, agri-tech kind of stuff is also getting a lot of money from Safka's numbers. So absolutely, lots of growth and interest out of that space, yeah. Great. Chichi, Teresa, I'll hand over to you. Thanks everyone for the chat. I'll give to my hand over to my colleagues to just give a high-level intro. I think we can see your slide, Teresa. I think you can go ahead.
Okay, it's actually Chichi who's sharing. But I think without wasting any further time, thanks for that, Tabo. And maybe just to give a quick introduction to our fund, I'll try to move as quickly as possible through this presentation. But essentially, Feature Build Venture Fund 1, our very first fund, which we are very excited to introduce to the public, is a tech-focused early stage fund. And Chichi can just move on to the next slide. But we are essentially trying to say that we, as you would have seen from Tabo's presentation, we are trying to introduce very high potential scalable solutions to our investors. And essentially meaning that we, from our experience, skim through the lot and get the best of the very best. And we've seen that in the market, there's a lot of outliers that are being pushed aside, purely because they're not conventional, or purely because there's no proper understanding of what they are offering. And which is what we believe that we are essentially introducing with our fund. Next slide, Chichi. And our fund proposition or fund thesis is essentially that we are raising it's a micro fund, like Tavo mentioned. It's a 50 million rand fund, around approximately $2.5 million. And it's essentially focused on tech-driven startups that have a focus on, and our fund has a primary focus on Black female led startups. Like Tavo mentioned, I mean, our impact focus is a science, right? It has numbers to back it. And I think Tavo Tavo Mudiba raised the question in the Q&A that there's a very huge underrepresentation of female-led startups. Likewise, female Black-led, even more, right? So meaning that if we are saying we want to have an impact through this fund, we need to be able to show evidence of supporting the underrepresented. And while also uplifting this very highly scalable and high potential funds. And with this, we are essentially saying that the quota needs to be explicit. We need to have a mandate around who we are funding. And that's our focus. Chichi, you can move on. Okay, and our fund focus has different criteria. Sorry about that. And our fund focus has different criteria of social evaluation, right? So from industry experience to full-on understanding of what problems are being solved, and it must be purely tech-led. And we are saying that this fund can pretty much address those areas of the industry. One, Chichi. And introducing our team, we've got a very experienced team as part of our fund, from Chichi, who's focus in this fund is post-investment support, venture building, and mentorship, and has herself over 10 to 12 years experience in venture building. And myself, who also had my own tech startup, built a product that has scaled to over 5 different African countries, and have also been through the steps of fundraising for my own product, and have seen the issues with VC in South Africa, and essentially trying to raise money for any startup in South Africa.
Teresa, sorry, just to jump in there. I think there's a request to just use slide format. I also see we're out of time, but hopefully everybody can stay for another 5 minutes, and then we'll just close off here. But if you don't mind just sharing, making it bigger, Chichi. I think, there's a request to put it to slide format. Thank you. Teresa, go ahead.
Thanks, Thabo. And Thabo, who's been in the investment space for over 20 years, and Murendeni, who's also on the call here, who's our venture scout and fund associate, who's basically responsible for the deal flow and sourcing some of these unique ventures that we are investing in. Next slide. Yeah, and we are essentially sector agnostic. So with the limitation of technology, right? But from a tech perspective, looking at all the verticals of technology, everywhere from your health tech to what's booming now, which is fintech and edtech, all the way to food tech. But anything that essentially addresses a problem from a tech perspective and has potential to scale. Next slide, Chi.
Okay, so we really believe in the power of our networks. As part of our process, we really want to tap into this and to tap into the growing pool of professionals, specialists, technical experts, founders, and executives who advise us and help us strengthen our due diligence process and technical due diligence process pre and post investment. So this is a growing list of our advisory network. We have people who specialize in IP and patent law, software, risk management, AI and machine learning, just to give our investment every chance of success. So a lot of businesses still fail post-investment, and access to support in network skills, market entry, and our advisory network is one of the major controls to help mitigate risk of failure. So so reach out to me, reach out to us if you think that you can contribute as an advisor to our fund. We're always open for having these types of conversations. I'm going to hand over back to Thabo.
Oh, wow. Okay, cool. So I think you can skip these slides just in the interest of time. Skip all of these. I think the fund structure is as maybe simple as that. It's a normal, what you call a limited partnership, or I don't want to go into the detail, but a normal en commandant, even worse, usually in Latin, partnership. And it's a kind of common structure for funds in South Africa. So that's all across the globe. And that's how we are set up. We kind of, in the fund looking at call it between a 3x. If we shoot the lights out, call it a 5x kind of number. And we've done some modeling to kind of figure out, of course, the future is not modeling, but we've kind of figured out how we think we want to get there over, call it a 10-year number. So call it a 30-40% IRR would be great. To give you some numbers, I think what we know publicly, and it's not a lot, but if you look at Knife Capital's first fund, I think they exited at about 58% annual return. So if you put your money in a bank to compare it, you're going to get 6%. And in venture, you can kind of get 40, 50, 60%, possibly on the high end. So perfect. And then just the last slide, Chichi, if you just want to participate in the fund, just hit us up. You can scan the QR there if you are ready to kind of chat. But I won't go into these details a lot. It's more for the investment side. But what essentially we're saying is if anyone wants to come into the fund, it's 100,000 Rand minimum, which is not a lot. It's literally $8,000 per investor. So very low minimum to come into the fund. But as a corporate, 500,000 Rand, no maximums. And yeah, I think we're more than happy to engage. I don't want to be, as I said earlier, we're not selling, but just to give you the information as to where the fund is. And we are looking to get to a first close, meaning, get to first to kind of start investing by end of May, June. So by end of Q2, we should have the fund ready to deploy. But yeah, we're all good and we are pushing ahead, and there's a bit of a process. So reach out to us and reach out to me if you have my details, or you can scan the QR and reach out to us, and then we can have a chat both around both the VC space, if you want us to do a bit of work and help you guys or help anybody figure out what's going on in this VC space. We do a lot of research around that. Have a lot of, we've been accumulating a database, I guess, of data on the sector. And if you, of course, want to tap into the Future Build Fund and be an investor directly, I think we're going to give you a 3, 4, 5, 6x kind of return over time. Yeah. Great. Thank you, everyone. I'm going to close it here. Our details are here. Please feel free to reach out. I think if any of you guys need my details, you can go to our website, which is futurebuildventures.com, or go to 8season.com for 8season Capital, and then we can connect. And more than happy, looking forward to more webinars like this. I think this was very detailed, and I do apologize for the data, lots of graphs. The next one, we'll probably have a manager to come and talk more about their fund strategy. And yeah, but we'll publish this on our website if anybody wants to have a look, and we can take it from there. But thank you, everyone. Is it good afternoon, good evening, good morning, wherever you are dialing in from. And thank you very much. And do get in touch with us, and looking forward to connecting. Teresa, Chichi, I don't know if you guys want to say cheers. Yeah, but thanks, everyone.
Thanks. Cheers.
Bye.
The webinar has ended. Thank you for joining. Goodbye.